Orbit. It is Monday, January 29th. It's Income from Options Weekly, where we look at the setup in the options market, the vol, the expected moves for both 0 DTE trading, as well as 1, 2, 3, 4 DTE trading for the week. We are looking at SPX. The markets are looking to open relatively unchanged this morning. The expected move for today puts the SPX at about 49.10 to the upside, 48.75 or so to the downside. That's likely to expand a little bit actually on the open because once you tear away that weekend effect of where they kind of hammer vol into the close on Friday. So look for that to be around a 0.4% expected move on the open, and you will see those new strikes on the app. Of course, with all 0 DTE trading, especially on a day where you have an unchanged open, be very careful about those wings. If we were going to go in here and look at an iron condor based upon those strikes, this is something where you might want to take it, and here we are expanding it a little bit, getting it to 48.70, 49.10. I mean, even that $5 on either side might be enough. 77% probability of profit on that, and then you can take it up to 82. But play around with it on the app, get to that comfortable risk reward where you also kind of are backing it up on the chart in particular and looking at like where those strike levels are. So for instance, if we're looking at the 1 week, this expected move here where it's 48.75 to the downside, you can see just a couple of days ago, we were down at those levels, and then down here, 24th, we were down below that level. You can see the same thing to the upside. So this is right inside last week's highs and lows of the range. And so that's another way to look at this is perhaps, and particularly if you're going out maybe a day or two, the expected move maybe takes you outside that range. And then we, of course, have these lows back from the 22nd and 23rd. And as you come out a couple of days, those can be used, that kind of technical level on the downside, to sort of determine risk of any credit put spread sides of a condor or outright credit put spreads. Using that market momentum, if you did see a move in the next day or two where you could possibly pick up, say, a credit put spread, selling a credit put spread at these levels, we're looking at 48.50 basically. You come out here, the 48.50 expected move is for the 31st, the last trading day of the. But if you get that move lower, even to the bottom of this last week's range, you can maybe lean in and get a little bit more premium on the sale of a credit put spread down here at these levels. And then, of course, the same thing is true if you get a move higher. That affords the opportunity potentially to sell a credit call spread up above that range where your only risk is a breakout to new highs above last week's range. We detailed a little of this last week, especially on the Twitter feed, and I will follow up and do a couple of those examples where you kind of use the market's momentum to leg into credit put spreads and credit call spreads. Now, one of the other things we have this week is we have a lot of earnings. We've got Microsoft, we've got Amazon, we've got Google, we have Meta, and those after-hour moves are very interesting. It's one of the reasons, I'm looking at SPX right now. If you go into SPY or Qs, let's go into Qs, for instance. You might have a position, if you are the type of trader that's doing daily expiries, you might have a position that appears totally fine and out of the money. Let's just take one of these days, the 429 level here in the Qs, and let's say you had a credit call spread or a credit call spread side of an iron condor or something like that. And the Qs are 428 right before, and you're short the 430 strike, and they're 428. And then a couple of those mega cap tech companies all beat after hours. And the next thing you know, the Qs are up $2 after hours. All of a sudden, your credit call spread's at risk. Well, that's one of the things about, say, SPX, coming back to SPX, is SPX is cash settled at 4 p.m. Eastern. And you don't have to deal with that nonsense after hours and worry about something that appeared to be max gain out of the money, and then all of a sudden having to deal with even like a quarter of a percent or a half a percent move after hours in SPY or Q because both Meta and Apple beat earnings, that sort of thing.